All right, why don't we go ahead and get started? This will be the official cue to begin lunch. So I want to thank everyone for coming. And you need to know that this is the biggest non-legislative year we've ever had for business days at the Capitol. About 2 weeks ago, Stacy Dorrington told me, she said, I think we're sold out. And I said, well, we always get a snowstorm during business days at the Capitol. So let's go ahead and oversell by 20. And she oversold by 40. And we have a waiting list. And so I think it signifies how popular and how strong this event gets year after year. And so I'm going to give you fair warning today that next business days at the Capitol is going to be a legislative year. And it's going to be right after an election. And last year at business days at the Capitol, we sold out during a legislative year by Thanksgiving. So if you have interest in going to business days at the Capitol in 2025, I would pay very close attention to when registration opens and not delay, not procrastinate, not wonder what you might be doing on that particular day, but I would suggest you register because we expect it to be another banner year in 2025. And frankly, I think some of the success that we see from business days at the Capitol is the Montana Chamber of Commerce is just continuing to get to be a stronger, more proficient organization. We've got an amazing relationship with Governor Gianforte and his entire administration, with the legislature. And to put a finer point on that, the Montana Chamber of Commerce brought forward 10 bills during the 2023 legislative session. 10 bills that sought to improve the overall business climate in Montana. These were substantive bills. These weren't naming a bridge in some remote part of the state. These were bills that genuinely affect how business can operate in the state of Montana. Of the 10 bills that the Montana Chamber of Commerce brought forward to the legislature, 9 passed through the legislative session and 9 were signed into law by Governor Gianforte. It was one, thank you. One of the most successful sessions that we, on behalf of the business community, have ever had. That success is also built upon the great membership that we have. And I can't say enough about what strong membership we have, and I want to thank each and every one of you for being a member of the Montana Chamber of Commerce and all the different ways that you support us, from your membership dues all the way to your sponsorships. We've got some organizations, and I'm not going to go through the whole list, but we've got some organizations that have been with the Montana Chamber of Commerce as a member for a shocking number of years. Blue Cross Blue Shield, Crowley Fleck, Burlington Northern Santa Fe, and the Helena and the Bozeman Chambers of Commerce are examples of the members that we have had that have been with the Montana Chamber of Commerce for more than 60 years. And you know that during that period of time, that there had to have been times when the Montana Chamber of Commerce was not perfectly aligned with their own interests. But they recognized the value of belonging to the state's largest business advocacy organization. And despite the differences that they may have had with us over those years, they stuck with us through it all. So I want to thank them. And I want to also thank some of our newest members that are new to the Montana Chamber of Commerce. Cushing Terrell, we want to thank them. Avonlea Care, Big Sky Resort, Wonder School, 0 to 5, and the Jackson Consulting Group are our most recent additions as members to the Montana Chamber of Commerce. And so I want to thank them for their support and thank them for believing in the bigger cause that we have. We're guided by a board of directors that represents a very diverse set of the business community throughout the entire state. And I would like to recognize the Montana Chamber of Commerce Board of Directors and the Montana Chamber of Commerce Foundation Board of Directors. Would you all please stand and be recognized? So over the course of the next 2 days, you see some of our directors. They'll be wearing director name badges, so if you have specific issues or concerns or you want to chat with them, feel free to corner them. I want to also introduce to you the staff beyond myself at the Montana Chamber of Commerce so that you can talk with any of them. We don't give a lot of recognition to the team that it takes to put this together. And this is a big lift. It is a heavy lift to put an event like this on. And so I want to take a minute to recognize the rest of the staff at the Montana Chamber of Commerce. And I'm going to ask that they step in the door here so that I'm not introducing a blank wall. It'll just take a second. So I'm going to start with Stacy Dorrington. Stacy does all of our events. She's the one that is responsible for putting on this event and the shocking amount of details that go on behind this. Credit to Stacy for once again leading us into a record attendance, record sponsorship. Thank you, Stacy, for all that you do. I'm going to ask that you hold the applause on everybody else, not to short everybody else, but just so we can get through them all. I know. Matt Olson. Matt Olson is our Director of Network Development. He's leading a big effort for us on behalf of the business community to bring the Montana, to create the Montana, what we call the Headwaters Tech Hub. He's also an expert at connecting businesses with each other. So if there's someone that you need to meet or you would like to have a connection with that's in your supply chain or someone across the state, Matt's your guy. Sheridan Johnson, she's standing there at the back of the room there. Sheridan works with Charles on our government affairs sort of work, and she's been an outstanding addition to the Montana Chamber of Commerce. And she's wading into a new issue for us, which is childcare. And so we're wading into this childcare issue to see what role the Montana Chamber of Commerce can do to address the significant pinch point for the Montana business community. Charles Robinson, I see Charles is sitting over here. Charles is our government relations director. Charles was the one that was responsible for bringing forward that number of 10 bills that we brought forward in the last legislative session, lining up the constituents to support it, talking to legislators, overcoming some of their concerns, and leading us to success, again, in the most successful legislative session that we've ever had. Candace Carr-Strauss, where's Candace at? There she is. She's back here in the corner. So Candace does all of our marketing and communications. And Candace is also bringing 2 new events to the Montana Chamber of Commerce that you might be interested in. This spring, we're going to have a Women in Business Summit in Bozeman, which is going to be focused on how women are leading in the business world. And so I want to encourage you to talk to Candace about that. And then she's also doing an event called Convergence, which focuses on tourism, outdoor recreation, and the film industry, and their contributions to the Montana economy. And so I would encourage you to talk to Candace about any of those sort of events because they're going to be both big events. Diamond D. Duran. Diamond has been with the Montana Chamber of Commerce for 40 years, 2 of which she took for a brief retirement and then came back. But Diamond D is the one that makes our office run. She makes sure that we are appreciating each other, makes sure that all of us have the appropriate amount of sparkle. We couldn't do it without you. Thank you, Dee. All right, I think I've got all of the staff that is here at the moment. We've got a couple others that aren't here. I got one by the name of James Eason who's doing our youth entrepreneur work. He's down in Dillon talking to the Youth Challenge group down there, introducing some curriculum down to them down in Dillon. And you'll see him later on here today. As we get ready to move forward here with our program today, I wanted you to know that while we had a huge year in 2023 from a legislative perspective, we're already preparing for 2025. And we're already sorting out the priorities that we want to bring forward on behalf of the business community. Things like tort reform. We're looking at childcare and what role that we can play in addressing that significant pinch point. Workforce development. We're also looking at Medicaid expansion and how we can be supportive of making sure that Medicaid is reauthorized in the Montana legislature. We have a big plate. It's going to include tax increment finance districts. We're going to be looking at taxes overall in general. We see that there's a window of opportunity, and we want to seize it, and you should know that we're acting with a high level of urgency. And so we look forward to working with you all and making sure that we are identifying and prioritizing the issues that matter most to you. So with that, I get to take most of the rest of the day off and turn it over to the chair of the Montana Chamber of Commerce Board of Directors, Nancy Schlepp, who is the Vice President of Communications and Government Relations at Sandfire Resources, and that is her full-time job. And this is now her part-time gig as she's acting as chair of the Montana Chamber of Commerce Board of Directors. Nancy? Ready?
I'm ready. Yeah, thank you. Good afternoon, everyone, and welcome to Montana's Business Days at the Capitol. From humble beginnings over 2 decades ago, when the Chamber team organized visits to the state capitol to meet with lawmakers, the Chamber's signature event of today, Business Days of the Capitol, surpassed every expectation every year. But without sponsors, this would not be possible. And I'd like to acknowledge our sponsors throughout the event, and please note that all of our sponsors have blue ribbons on their name badge. And I'd like to mention our platinum sponsors right now: Atlantic Richfield, Blue Cross Blue Shield of Montana, Boeing, Burlington Northern Santa Fe Railway, First Interstate Bank, Montana State Fund, Montana State University, New Horizons Studio, Northwestern Energy, Stockman Bank, University of Montana, and Valley Bank of Helena. Thank you all, and we appreciate your support. I just wanted to tell you all a little bit about myself. I live in the metropolis of Ringling, Montana, and where I ranch with my husband. We own our family ranch, and our 3 children help with that. And I'm proud to share that that's been in my family for 128 years. And then my great-grandparents came to this area as silver miners in Castletown, if you know that area. And so it's very fitting that things come full circle, and now I work for a mining company bringing Black Butte copper to fruition in White Sulphur Springs, which will be the first new copper mine in Montana in 40 years. And so then in my spare time, besides the chamber, some friends and I bought the Ringling Church, and we have made it into a venue, and a wedding venue, event venue, and then it has an Airbnb in the back. So I am very interested in Montana business on several levels: as a corporate officer of a publicly traded company, as a family-owned ranch business, and as an LLC. So we are very invested in what is best for the state of Montana. I'll tell you all that Montana's in my blood. And we all have to serve and make our state better. It only takes a brief glance at this year's Business Days at the Capitol agenda to see how serious the Montana Chamber is about being at the forefront of issues that are important to our state. From child care to addressing housing needs to growing our next generation of Montana entrepreneurs, we are involved at every level. And it really does take a top-tier team to do that, and I think that we have a top-tier team that is working on this. And Todd gave everybody else recognition, but I do want to take a moment to thank Todd for everything he does and his leadership and vision in leading the Montana Chamber. I also want to thank all of the leaders in this room. You guys are the drivers of Montana, and we make a difference every day because of everyone in this room. Thank you very much. I am sincerely grateful that we have volunteers such as yourselves and such as our board members that are just stellar leaders in our state that are willing to give time. So thank you to everyone who has made today possible. Being involved in Montana and make a change into the future is important, as I think change is the only one constant in our world. And it's happening faster and faster. So we have to be ready for change. And this takes a mindset of cultivating innovation and embracing change as it comes. My hope is that each of you take at least one idea away from the next day and a half that you can implement positively into your lives or your business for a positive change. And with that, one of the most positive people I know is who I get to introduce next, and that is our speaker who diligently works every day to make a positive difference in the state of Montana. The Montana Secretary of State oversees elections and voter registration in addition to providing an extensive range of services to Montana businesses. Since taking office in January of 2021, Secretary Jacobson has embraced the business community, striving to improve services and promote business. With Montana on pace for another year of new business growth and registrations, no doubt Secretary Jacobson and her team are going to remain incredibly busy, which makes us appreciate her taking the time to be here today as our special guest. Please join me in welcoming Christy Jacobson, our Secretary of State.
Thank you so much for your gracious welcome. Thank you, Todd and Nancy, the board, and the entire team at the Chamber. Thanks for having me. Thanks for being here. This is an awesome turnout today. And I really like the intermission and pump-up music. That's really fun. So keep that going. It's been an honor to serve all of you. At the Secretary of State's office, we work with a servant's heart each and every day, and we're proud to support and partner with our local businesses and partner with business communities to make it easier to do business in Montana. We've been shrinking government so businesses can grow. I'm happy to report our business services division is doing exactly that and providing stellar service to our business community. When I took office, our goal was to share key indicators of economic strength in Montana. So we introduced the Montana Business Economic Report. It's on our website. This valuable tool provides information on the number of active businesses in the state and has a heat map of where those businesses are located. One of our greatest strengths is the continued growth of new businesses in the state. Montana had record business growth in each of my first 2 years in office. And earlier today, I was proud to join Governor Gianforte to announce that 2023 has outpaced the previous two records, and we have new record growth in the state of Montana. Nearly 60,000 new businesses were registered in Montana in 2023. That's 20,000 more new businesses than the year before I took office. I think that's worth an applause. It's no wonder Montana was recently rated the number one state to start your small business, and it's because of the hard work from you, our Montana businesses. Montana is getting new businesses in the industries of construction, farming and ranching, retail, insurance, and more, and we're proud to assist them along their journey. But we're here to serve more than our new businesses. Customer service is our number one priority at the Secretary of State's office for most of the tenured businesses as well, and I was told we have a few of those in attendance this week. It's a significant milestone for a business to celebrate an anniversary. But these particular businesses have celebrated more than 100 plus years, and we want to recognize them here today. The Billings Chamber of Commerce, registration date of 1918. John Brewer with the CEO, would you please come up and receive your recognition? right. Go ahead and come all the way up. Come all the way up. Don't be shy. All right. Yeah, thank you. Appreciate it. And Benefice Hospitals, we have Ed Buttry, who's the Benefice Health Chair. There you are. I didn't see you before. Awesome. Thank you so much. The University of Montana, we're acknowledging as well, founded in 1893. And we have Dave Kuntz, Director of Strategic Communication, here to receive the recognition. And last but certainly not least, Montana State University, founded in 1893. We have Dr. Allison Harmon, who's the Vice President of Research and Economic Development. Finally, this afternoon, I wanted to remind all of you that the Secretary of State's office is your partner. We make it easier for Montana businesses. We offer 24 hours a day, 7 days a week filing through our online filing portal. We're available to help you throughout your step of the business journey. And don't forget that the 2024 annual report filing fees are waived for all of our 274,000 businesses. Thank you again for allowing me to present today.
One of the most important state agencies that we work with on a day-to-day basis is the Montana Department of Commerce. We work with the Montana Department of Commerce on issues related to housing. We work with them on issues of business recruitment. Montana Department of Commerce has been a key partner in our work in the Headwaters Tech Hub, and they have been a long trusted ally of the Montana Chamber of Commerce. So, in a bit of breaking news, I am pleased to announce today that Paul Green, Representative Paul Green, is the new director of the Montana Department of Commerce, and he's here. Paul, would you please stand? He's not going to be Director Green until the 16th of January, but he's going to be here today and this evening, and so I would encourage you to reach out to Representative Green and introduce yourself and spend a few minutes visiting with him. And we really look forward to working with you, Paul. And it's going to be a fun tenure ahead of us. So congratulations again. So as we move into our first panel here, we're not going to belabor you or bore you with reading the bios. You all have a program that you picked up at the front desk, and so I would encourage you to look at that for the bios. But we know that taxes is that part of the equation that you can't avoid. And we've had really good feedback in the past from bringing in tax experts that can speak on some of the most recent changes and some of the expectations going forward, not necessarily from just a granular standpoint, but from a broad, overarching sort of view. And so leading this discussion for us today, I couldn't think of anybody better than Scott Sainert, who's the Vice President and Senior Commercial Lender at First Security Bank, and he's the moderator of our News and Views Federal and State Tax Update. Scott?
Good afternoon. Everybody might want to stand up, take a deep breath. Very exciting tax stuff, which we all it's a love-hate relationship. We love it when we don't have to pay too much, and we hate it when we do. Today I'm delighted to moderate this panel, an insightful focus on some current tax changes, both federal and state level. We're privileged to have as our presenters Ron Yates and Joe Kristen from Eide Bailly, a leading consulting and business advisory firm. Our presentation today is going to cover quite a wide range of topics, including federal tax overviews, changes in tax legislation, and the implications for business and individuals. We're going to jump into specifics on the capitalization of research costs, which I know is a top-of-mind topic with a lot of my clients that are advancing technology on a daily basis. We're going to talk about the phase-out of fixed asset depreciation and some intricacies of the interest rate expense limitations. I think it's going to be a very insightful discussion today by our presenters. Our aim is to equip everybody with the knowledge and understanding to navigate some of these complex issues. At the end, we should have some time for some questions, so I would encourage questions at the end of the period. Again, I'd like to thank you for joining us, and I would like to bring to the stage Ron and Joe.
Good afternoon, everyone. My name's Ron Yates. We'll do some brief introductions here in a minute, but again, today, as Scott graciously introduced us, we're going to do over the next 45 minutes or so a high-level review of various federal and Montana income tax topics. So, thrilling, I know, a great way to start off this session. Usually Todd schedules us in the morning on the second day, so usually everyone sleeps through our session. So today we're expecting much more engagement than usual with this great prime spot that we have. Again, Joe and I will briefly introduce ourselves here in a second as I move through see if my clicker works. But what I was going to say is, at least when it comes to a tax topic, whether it's federal or state, really everything regarding taxes is inherently political. But for our discussion and our topics we're going to present today, certainly not political. As CPAs and business advisors, we work with taxpayers and we work with businesses and government entities of all persuasions, of all political parties, to come up with the best answers. Okay, yeah. To come up with the best answers for our clients and for government and taxpayers. So we use the rules and tax laws as written, and so today we're going to talk a bit about that. So again, all things taxes are political, but our discussion today certainly is not political. As you can see from our bios up there, I'm Ron Yates. I serve as a tax partner in the Eide Bailly office in Billings. I've had the privilege to serve as a past chair of the Billings Chamber of Commerce Board of Directors, and I've also served as past chair and past chair of the Montana Society of CPAs. It's been my pleasure to join in those roles. I went to school at the University of Montana as an undergraduate and graduate degree in accounting, and I'm a native Montana, and I grew up west of Red Lodge on a family cattle ranch that my mom and dad and two brothers still run. So I spent my entire career and my entire life in the state of Montana. Before I turn the mic over to Joe to introduce himself here for a second, I would like to, my colleagues, two of my partners from our Billings office are here with us today. I'd like to have them stand and recognize Debbie Potter, who is my tax partner and the tax department head in the Billings office of Eide Bailly. So there's Debbie right out there, and Debbie is also an incoming chair of the Billings Chamber of Commerce Board of Directors. And I also have Russell Rice next to Debbie. Russell is also a tax partner in Billings, and he's a past chair of the Montana Society of CPA. So I wanted to make sure and recognize those two. Thank you. My colleague Joe is here today, and I'm going to have him introduce himself in a second. But unlike most of us accountants, he's a pretty cool guy. He tweets, he blogs, he writes tax articles. I think, he's a very dynamic into social media type of things with a tax perspective. He serves in our National Tax Office, which is a virtual office, but it's really individuals with specialized knowledge who help us as CPAs and our clients address questions and come up with optimal tax answers. So Joe is a great thought leader within the profession. We're lucky to have him here today. I'd like to have Joe just for a second or two give us a little bit of your background, because he's not a Montanan, and then I'll come back up, talk briefly, and we'll turn the slides over to Joe. So Joe, would you mind telling us, I think you got a mic here, just give us a little bit of 30-second background information, if you would. I think it's on.
Hello. Yeah, I'm a CPA, as you probably guessed. I grew up in the Chicago area, went to school in Iowa and Southern Illinois, and worked for a national firm for a while, jumped ship and helped start a local firm in Des Moines. And then in 2017, we merged into Eide Bailly, which was something we should have done a lot sooner. But before we merged into Eide Bailly, I learned something that I didn't know, and that is that a lot of people really think that Iowa and Montana are reasonably close. I got a phone call from an attorney in the UK, and he asked if I would take on a client who was a rancher in Montana, and I said maybe, but why, wouldn't you want somebody closer? Well, how far is it? And I said, well, at least 20 hours by car. And he was completely taken aback. You can drive from London to Berlin in about 13 hours, so I don't think he was used to the distances. Anyway, I have done a lot of different things, primarily in the closely held business world, and I have been thrilled to join the Eide Bailly National Tax Office, and it's a great team.
Thank you, Joe. And yeah, we'll have some time for questions, as I said. So throw some hard ones at Joe, because he has a lot of tax knowledge. In the next couple minutes, I would just like to briefly introduce our firm, Eide Bailly. Hopefully, all of you are familiar with Eide Bailly. We serve the state of Montana, but our only office is in Billings. You can see our footprint on the map. You can see some accolades. We've been around for more than 100 years, more than half of that in Montana, in Billings. We have offices west of the Mississippi, more than 40 of them, as well as in India. And we're a top 25 CPA firm in the nation. As a matter of fact, right now we're about the 17th largest firm in the United States. About Eide Bailly, again, just a little bit of additional information would be, you can see our service mix between tax, audit, and other, as well as our dominant industries, many of which, if not all of which, are also dominant industries within our footprint and also within the state of Montana. There's a list of our offices, but you can see that we do serve the entire Montana, northern Wyoming, western Dakota market out of our Billings, Montana offices. Again, 43 offices in 15 states. And this just shows you a little bit of the industry depth, the expertise that we have with specialized knowledge within these industries of focus within our firm. Many of which, like I say, are industries which you all are employed in, work in, serve from a government capacity in, egg producers, agribusiness, dealerships, construction and real estate, banks, oil and gas, manufacturing and distribution, are all areas that we all specialize in, have specialized knowledge that we bring to the table. But we serve clients from large to small, corporate to individual. So we're also very much reflective of our markets here in Montana and elsewhere. And again, service specialties would be, again, when you think of an accounting firm, you probably think of tax, you think of audit, you think of accounting, you might think of payroll, employee benefits, but oftentimes you don't think of a lot of the specialty services that as a top 20 firm we offer, which would be getting your business valued from a business valuation standpoint, a fraud audit, fraud and forensic advisory services, cross-border transactions. Those are all investment banking, data analytics. Those are all things that we have expertise in that we can help you and your business as you go forward. So with that, again, I'm going to turn the mic over to Joe for an exciting and timely federal tax update for about the next 25 minutes or so, 30 minutes, and then I'm going to jump back up here for the at the podium for about 10 more minutes, and we'll answer some questions as well. So, Joe, you're up. Here's the clicker.
Thank you. It's great to be here, and what we're going to be talking about is pretty timely because in the last week, these first three topics I'm going to be talking to you about have suddenly become really live in Congress, and I had thought they were pretty much moribund and nothing was going to happen, and nothing may end up happening, but at least right now there's movement. And these three issues are capitalization of research costs, the expiration of bonus depreciation, and the limits of interest deductions that kicked in last year. The research thing kind of surprised a lot of people this last tax season. The research and development rules really changed effective in 2022. But the changes were legislated in 2017. It was one of those backloaded things that was done as a revenue raiser for the costing out the 2017 tax bill. And a lot of people thought, well, they're never going to do this. But they did it. 2018 came and went. They didn't move it back. 2021, they didn't move it back. 2022, they didn't move it back, and it took effect. And all of a sudden, a lot of people who had been deducting their research expenses as they went suddenly found out that they had to capitalize their research expenses and amortize them over a period of years, 5 years for U.S. research, 15 years for research done outside the U.S. And as you can imagine, a tech firm where most of the expenses are research could really get hit hard because suddenly it becomes almost a gross income tax instead of a net income tax. And so it hit them very hard, and it was a serious cash flow issue for a lot of taxpayers as they went along. And we had to definitely deal with it. What is, and there's a lot of things that count as research. It can be labors, it can be materials and supplies, cost recovery, patent costs, rent, utilities, insurance, taxes, repairs and maintenance, travel costs. More things were disallowed than you were even allowed research credits for if you did it right. And the IRS, I think, thought too that it was going to get, that this would never take effect, but it didn't work that way. And the IRS was sort of caught flat-footed, and they didn't issue guidance until well into 2023, after the tax deadlines for paying in on the new taxes that this resulted in. And so there's still a lot of issues that have not been resolved yet, and a lot of work to be done here. One of the biggest issues that you run into is that developing software for many companies is treated as a research expense. And software development includes developing upgrades and enhancement, and in that case you can't start, you're amortizing those costs until it's placed in service. So it becomes real important to distinguish what is a software development cost and what is a software maintenance or installation cost, because those costs are not going to be capitalized as you go. Again, there are still a lot of questions out there, and there are still a lot of people that are hurting as far as how they're, as far as the cash flow on this. The next issue is bonus depreciation. The treatment of depreciation has changed a lot over the last, say, 35, 40 years. Before 1986, it was kind of a wild game, and it was rationalized a lot in '86 by setting up these categories called Modified Accelerated Cost Recovery System, and that was in place for almost 2 decades. And then they started doing what's called bonus depreciation. And with bonus depreciation, you get to depreciate more in the first year, and you only have to spread some of the cost out over a period of years. And it gradually was improved, and then finally in 2017, they went with what was called 100% bonus depreciation for a temporary period that ended in 2022. And 100% bonus depreciation lets you write off in the first year most non-real estate costs that were otherwise capitalized and depreciated. And then starting with 2023, it started to phase out 20 percentage points a year over a 5-year period. So it was only 80% bonus depreciation last year, 60% bonus depreciation the following year, then that's 2024 and so on. And obviously that is a lot less favorable. Yes, over time you get the same depreciation deduction, but a deduction that you get in 8 years is worth a lot less than a deduction you get in the first year, because time value money, discount rates, all that good stuff. And so in effect, after inflation, when you buy machinery, you never get full cost recovery if you have to spread that cost over a long period of years. And that is not a taxpayer-friendly thing. And so it's been very unpleasant, particularly for capital-heavy industries, which there are a lot represented in this room. Then the next issue of the so-called big 3 tax issues that they're dealing with this year are interest limits. Like the research cost thing, this was designed to kick in later. Congress uses a 10-year budget window, and typically they put the goodies up front and the tax increases at the end of the budget window when everybody has forgotten who voted for those tax increases. And that worked with this one as well. This is a limit on interest deductions, and it has evolved over a period of years. Basically now, though, starting in 2023, it's for most taxpayers 30% of taxable income before interest. Before 2022, it was 30% of taxable income before interest, depreciation, and amortization, which is obviously a lot higher number. And then before that, it was 50%. So it started really to bite in 2023, which of course leads to a lot of unhappy taxpayers, which leads to Congress dealing with that. So not all business is covered by this. Dealer floor plan interest, if you have an implement dealer or an auto dealership, that is excluded from this limit. And then there are optional exclusions for farm interest and real estate interest. However, those exclusions come at a price, and that price is a reduced depreciation deduction as you go along. And as we just discussed, if you have to stretch out your depreciation over a longer period of years, that is real money. Farmer election is a permanent election, and if you do that, you have to go to a straight line depreciation and a longer depreciation period for any assets with lives of 10 years or more. And that includes most livestock, includes livestock structures like hog confinements, like barns, and those things, instead of being potentially bonus depreciable, suddenly you have to spread them out over 12 or more years on a straight line basis. So there's a real cost to electing out of the interest limits if you're a farmer. An electing real property trade or business can also elect out of these. Again, it's a permanent election. It's a lot less painful, though, for a real estate business. You're always straight line for most of your real estate structures, but going from 15 years to 20 years on straight line is a lot less painful than going from 1 year or 7 years to 12 years or 20 years on a farm building. And then non-residential real estate, you only go from 39 to 40 years. So it's a lot more attractive for a real estate business than it would be for a farmer. But again, it's a permanent election, and it's not a good thing if it works out wrong. Who qualifies? Real property trade or business means real estate development, redevelopment, construction, acquisition, conversion, rental operation, leasing, or brokerage. So it's pretty broad, but it's not something you want to enter into without giving it a lot of thought. A lot of people have, sort of blown this off as, well, we're a small business and there's an exclusion for small businesses. Small business being defined when it was enacted at $25 million of gross receipts on average over the prior 3 years before the year that you're counting for. For 2022, it was $27 million. For 2023, it's $29 million. And a lot of people say, well, we're small. We don't have to worry about that. But I think a lot of people lose track of what that really means to be small. You have to apply that smallness test on a controlled group basis. That means businesses that are under common control have to be aggregated. If you get a K1, you have to include your gross receipts from the company that you get your K1 from, your share of those gross receipts, in seeing whether you're small. If you have brother-sister corporations, they're counted together. If you have somebody who has a Schedule C business but who has a K1 that has a lot of gross receipts, even if it doesn't have a lot of net income coming through, then you might not be small on your Schedule C business. And it can apply to individuals as well. Finally, there's a tax shelter rule that can kick you out of the small business exclusion. You can't be small if you're a syndicate. Well, what's a syndicate? It's not like The Godfather. It's any business that has a so-called limited entrepreneur, whatever that is allocated more than 35% of losses. So if you have a business that's owned equally by 4 siblings and only one is active in the business, and it has a loss, that business becomes a syndicate. And suddenly you are subject to all these interest limitations and some other potentially unpleasant consequences that we aren't going to get into here. Farms have more generous participation rules, but it can have the same problems as a regular business. There are solutions for the tax shelter problem. If you only have one loss year, you can elect to use the prior year and get out of the tax shelter problem. But if you have 2 loss years, you're kind of stuck. So you have to watch out for that. So, what's going to happen now? Are they going to really let this happen? Well, they already let it happen for 2023. And I think the pain of paying a lot of taxes focused a lot of people and a certain number of legislators on saying, well, we need to fix this. And oddly enough, at least for the research cost thing, there's a broad consensus that, yeah, this needs to be fixed. But it's, why hasn't it been fixed? Because it's a business break. And there's a lot of people that say it's not going to be fair to fix a business break if we don't do something for smaller taxpayers. And the something is an expansion of the child tax credit. And so unless they come up with an agreement to move a child tax credit, the big three items that they're talking about are not moving. Now, in the last week, and especially the last couple days, there's a lot of noise coming out of D.C. saying we are close to an agreement. One of the articles said 90% of the way there. And, that's questionable, but that's 90% of the start of a deal. But as I think everybody here who's been following things in Washington knows, with the current makeup of Congress, with very narrow majorities in both houses, it is extremely difficult to put together a bill that will pass because there are so many veto points that a small group of disgruntled members in each house can stop a bill, and it takes a lot of working across the aisle to overcome that. And that's not necessarily something that Congress has been good at the last couple of years. That said, I'm more optimistic about something happening than I have been, but I don't think that I would bet more than even money, even now, on something getting through Congress because of the issues coming through. But we're watching it closely. If you follow ebtaxblog.com when we write about this, you can keep up with it pretty well. And we have a couple guys in D.C. who follow this stuff and know a lot more about it than we do. But they still think that they say unlikely that something will be fixed. So in other words, as you go into filing season, we have a tax law that has some painful parts. You can't count on it being fixed. If it gets fixed, great, but it's not something that's necessarily going to happen. But that's just a warm-up for what happens in 2026. In 2026, a huge part of the Internal Revenue Code reverts to what it was in 2017. And it's going to be not pretty. Individual rates go up to 39.6%. The cap, the $10,000 cap on individual itemized state and local taxes expires. The Section 199A small business deduction, the 20% deduction on individual returns, expires. Estate tax exemptions are cut by about in half, which will bring a vast number of taxpayers back into the estate tax. Miscellaneous itemized deductions are restored. The standard deduction goes all the way back down to 2017 levels. AMT comes back, and everybody who has been able to skate by without AMT for a while will get back used to it. Cats and dogs living together, and there is no way to know what's going to happen here unless you have a crystal ball that tells you what the 2024 election is going to come out as. And I think that if we've learned anything about elections, it's that we have no idea what's going to happen. We can make guesses, but I don't think anybody is going to go out on a limb and say that they know how that's going to come out. So, but the stakes are high. I mean, the dollar amounts, these are all 10-year amounts, but they're big numbers. The individual tax increase, that would be a $1.8 trillion tax increase over 10 years. The SALT cap expiring would bring back about $935 billion of that. 199A is a $137 billion tax increase. Estate tax, $126 billion. Standard reduction, that's a $1 trillion tax increase. I mean, these are big things. And, imagining a Congress that's as closely divided as the one we're facing now, doing a nice, smooth, far-seeking development of this is hard to picture. So I guess all I can say is hold on. And say, well, why don't we just extend the good parts and forget the bad parts? Because that's basically how things work in elections. When I'm running, I will say, I'm in favor of good things and I'm opposed to bad things. And I would like to, do that, but it's hard to work. This chart, I don't know if you can see it. It shows that, by 2052, we'll be spending more on interest under current projections than on any government program, including defense, including Social Security. And while that 2052 might seem a long way, it's about as far from now as 1996 is from now. And a lot of us can remember 1996. And, so it's not something that I think is wise to ignore. And at some point, if nothing else, the bond markets are going to focus on this too. So I'm not sure how much we can just focus on the good things. Okay, this next one, with the Secretary of State's mention of this, is timely. Even though this isn't a tax issue, strictly speaking, it's something that I think has been under-noticed, and it's the Corporate Transparency Act. And this is a thing that has just taken effect, and it affects pretty much every business one way or another. It'll affect everybody here who has, who files with you, who's in your nice online 24/7 database, because it affects all businesses, or can affect all businesses that register with any Secretary of State, not just Montana. And it's designed to shut down money laundering, to enable law enforcement to see through shell corporations and track down bad guys, and a lot of good things. But like a lot of good intentions, it can affect a lot of people who aren't necessarily money launderers, bad people, and so on. It requires so-called reporting companies to file with FinCEN, which is the Financial Crimes Enforcement Network. And it includes corporations, LLCs, or any other similar entity that's created by filing a document with a state jurisdiction, so typically Secretary of State offices. That means LLCs, LLPs, corporations, limited partnerships, and so on. It also includes entities created under foreign law if registered to do business in the U.S. Now, there are some exemptions. Certain regulated industries are exempt. Banks, bank holding companies, credit unions, insurance companies, publicly traded companies, large public accounting firms that are registered with the PCAOB, and tax-exempt entities, but subsidiaries are included separately from their parents. To be a large reporting company who's exempt, you have to have a physical office in the U.S., or more than 20 U.S.-based employees and more than 5 million in gross receipts reported on the prior federal tax return. And this is on a company-by-company basis. Existing reporting companies, ones that were registered before this year, have all year to file. But reporting companies that are created starting January 1st of this year have 90 days because of an exemption. It'll eventually be 30 days to file. And what they file is you have to report who your substantial owners are. There are a bunch of tests that I'm not going to get into that say who a substantial owner is, but it's a pretty broad net, and it includes people that are not necessarily people that you would think of as an owner. It's a painful penalty system when you run afoul of it. Civil penalties for filing late can run to $500 a day, which after a couple months is not a small number, and a couple years is even bigger. Criminal penalties can be involved, a $10,000 fine, and remember, it's FinCEN that enforces this. And FinCEN is also the same outfit that enforces the Foreign Bank Account Reporting Act. And how many of you file so-called FBAR forms or work on FBAR forms? Those are forms when you have a foreign financial account with a balance, an aggregate over $10,000 at any point in the year. And the penalties there can run up to 50% of the balance of the accounts. Regularly in the tax news, you see people with millions of dollars at stake for basically footfall violations, people who inherited money, maybe didn't even know that they inherited a foreign account, getting clobbered. And so FinCEN is not known for its kind and gentle enforcement tactics. So it's something that's really important to be aware of. And anybody who finds themselves on your database, which is an excellent service and is good to have, needs to think this through. There's a lot of exemptions, but basically if you're closely held and you don't have a lot of employees or you don't have a lot of gross receipts, you are likely to be on board. And it's the little guys that are the ones that are most at stake and the ones that most need to be aware that this is going to happen, because they're the ones that are most likely to have a filing requirement. And before, in my last few minutes, I'm going to talk about some lessons that we've learned from people who get in trouble so we don't have to, is the way I look at it. The tax court usually has several decisions a week, most of which are of interest primarily to the people involved, but often they can give important lessons to all of us. And this is one that involves somebody that you might know of. How many people in here have ever watched the movie The Godfather? Okay, do you remember the toll booth scene where Sonny gets ventilated? Well, that's sort of how it worked out for him in this tax court case. His estate, technically. Sonny had a nice hedge fund in his IRA, James Caan, I'm sorry, in his IRA, and there's a requirement when you have non-publicly traded assets in an IRA to provide an annual valuation of that. And as part of the deal with the IRA trustee, custodian, James Caan was supposed to provide that valuation. And when he didn't, they distributed it. They said, okay, we're done. We're distributing this out to you. and suddenly had this big taxable distribution in the millions from an IRA. And once his financial people realized what had happened, they scrambled and they put that amount of cash back in the IRA. The tax court said, well, that doesn't work. You'd have had to put the exact same property, which is the hedge fund, back into the IRA to even be eligible for penalty relief. And so you don't even get through the initial hurdle of getting penalty relief. The next hurdle being showing reasonable cause. And so the estate of James Kahn got hammered or ventilated, depending on how you would like to look at it. Property donations. This one, so many people, I think, look at the donation of property as sort of an additional standard deduction. Yeah, $500 to Goodwill. I'm sure that I put that much clothes in there this year. And, it kind of works that way. But if you let those numbers get too big, it doesn't work well. And here was a taxpayer who made and documented 173 separate visits to the Salvation Army and to Goodwill, bringing in clothes. And he claimed over $25,000 in deductions for that. And there's a little problem with that. If you make a property donation of a single class of property other than publicly traded stock in a year, and that donation exceeds $5,000, you have to get a qualified appraisal of your donations and submit it with your tax return, or at least have the appraiser sign off on it. And I don't know who can really provide a qualified appraisal for your old clothes, but whoever can wasn't involved here, and the IRS said no. You do not get your deduction. And that's true even though he had a log that showed, all the stuff he did. So the lesson you have to learn is that you have a donation over $5,000, there is no exception to the appraisal requirement if it's not publicly traded property. And donations of the same type of property over the year might have to be aggregated. But this also tells you something. There's a useful flip side of this. An aggregation rule can also be a disaggregation rule. Let's say you're cleaning out your basement and you have the old clothes, but you have the china that you inherited from grandma. You have the stamp collection that great-grandpa had. You have all this stuff, none of which is worth $5,000. If you can split that up into separate categories underneath $5,000, then you don't need an appraisal. You just need to show that you did it, and you need to have an acknowledgement from the charity that you donated the property. So something to keep in mind, sort of a one weird trick thing. Okay, tax TikTok. How many people get their tax advice from TikTok? One of the big things from tax TikTok has been renting your home to your business and taking a deduction for this. Where it comes from is the so-called master's rule, where if you rent your home for less than 14 days a year, you don't have to include that in income. Well, here we had three guys who owned an S corporation that had a Planet Fitness franchise that was doing really well. And they decided that they needed to get together a lot to discuss it. So they started to have monthly meetings in their homes and they rented out the space for $3,000 a meeting. I don't know if this room costs $3,000, to rent out, but it's anyway. They said no, $3,000 a meeting is a bit excessive. They allowed $500 a meeting for meetings that they could document, which was a small fraction of the meetings that they claimed, and the rest of it they had to include in taxable income. And with that, I don't want to step any more on your time, so I'm going to stop here and turn it over, and then we can cover more with questions.
Thanks, Joe. We're going to jump through a few of these slides here, and yeah, I'm going to finish our discussion today. Thank you all for, at least most of you, for staying awake so far. We're just about here to the end. And I'll go by quickly. I can make up a little bit of time here so we do have room for some questions. But I'm going to talk a little bit about some Montana-specific tax legislation that I think would be interesting to the group. So I think everyone in this room probably knows that a year ago we were up here in Helena because it was a legislative session, the 68th session for Montana, January through last May. And as you can see up there, lots of legislation was introduced and almost 750 bills became law. So I've got 10 minutes to talk about those 748 bills. So buckle up your seatbelt here, but that's not true. Actually, I'm just going to highlight a few of them that I think would be interesting to the group, mainly which have significant Montana tax impacts. So I just picked a few bills. They might not be your favorite legislation. Some legislators in here, that might not be your bill. I just thought they would be interesting to the group. And some of them have went into effect like a few days ago. So if I get something wrong up here in the question period, please correct me or let me know, because again, some of them were passed with an effective date January 1st, 2024. First one is, hopefully everyone here who's a Montana resident in 2021 and 2022 received a income tax rebate under House Bill 192 and a property tax rebate under House Bill 222. Did anyone not receive those? Did everyone receive those? Hopefully you did, because it was kind of get your rebate now or lose out, right? Although the property tax rebate is gonna, we'll get a second bite of the apple this year. Of another $675 if you meet the residency test for the following year. I think the slide notes that those rebates or refunds are not taxable for Montana, but if you itemize your deductions, they may indeed be taxable on your federal return. There was quite a few pieces of legislation last year that affected tax credits. So the first one up there is House Bill 408, Qualified Education Tax Credits. That's for donations to student scholarship organizations and public school districts. And so one of the only things you'll ever see, the deduction was the same, but the cap almost doubled, but it's 100% tax credit. So you never hear about us tax accountants talking about, I give away $1 and it saves $1 on my taxes. But it does here, and I think Russell Rice, we were just talking in our office, the next round of those tax credits become available on a specific date, right, in Montana. What was that date?
October 17th at 10 a.m.
Okay, yeah, don't let it mislead you. January 17th. Yeah, so if that's of interest to you, next week is the date, and generally most of those sell out the very first day. Qualified endowment tax credit under 506 has been around for a long time, but the cap went up from a $10,000 credit cap to $15,000. So that's pretty significant change in that credit. We changed trades and education training credit under House Bill 245. It really just added a number of additional trades that qualify for this Montana-specific tax credit, kind of blue-collar type of jobs like electrician, boiler maker, construction workers, those type of jobs. If you're an employer, you provide education, you can get that tax credit. Montana earned income credit went way up based upon federal qualification, and a new Montana adoption credit was added under House Bill 225. What I call a big tax bill for last legislative session in 2023 was the Senate Bill 121, which basically took the Montana individual tax rate if you make more than $30,000, you pay at the maximum rate. And it dropped that from 6.75 to 5.9%. Significant tax reduction beginning this year, January 1st, 2024. You can see differing opinions between Republicans and Democrats on the effectiveness and validity of that type of tax cut. If you look at that, I think they're probably both valid. Senate Bill 399, I talked to you about that 2 years ago when I was standing up here again. So it passed in 2021, but it was effective January 1st, 2024, a couple weeks ago. It reduced our 7 tax brackets in Montana to 2, cut the maximum tax bracket, or those 2 tax brackets, 5.9 and 4.7, and basically said follow federal. If you're married filing joint on your federal return, you should be married filing joint on Montana, not married filing separate. If you claim these adjustments on your federal return, Montana should follow that, not have its own regime. So I think that is helpful legislation, at least for compliance purposes. A year ago, you heard me talk a little bit about, in 2022, look at these tax credits that went away. This was the beginning of that legislation. 15 Montana tax credits gone. So those have been now gone for 2 tax years. Some of you have really missed these credits. Most people have not missed them at all. Senate Bill 399 also had talked about effective January 1st, 2024, we're going to get rid of all these Montana exemptions and subtractions. In return for a lower tax rate for everyone, we're going to get rid of all these special credits, these special deductions, these special exemptions, and just make everyone pay maybe based upon a certain income number, a flat tax rate, essentially, if you make more than $30,000. So, again, many of you will miss out on a lot of these deductions and exemptions and credits, but it should come at the benefit of a much lower overall tax rate. And for CPAs, we don't have to learn about all these credits, all these deductions, all these exemptions that apply to very, very few taxpayers. And again, some of you were all over these and had significant benefit, but most people and most businesses did not. We adopted a single apportionment factor effective January 1st next year, 2025. So multi-state taxpayers, rather than the traditional 3-factor formula, will go to sales factor only. So that really is an attempt for, I put up there, I think, the Amazons of the world that don't have payroll in Montana, that don't have property in Montana, but have a lot of sales in Montana. We'll capture some of that sales. It goes the opposite way, too. If you got a lot of property, you got a lot of payroll in Montana, but you got out-of-state sales, you probably pay less Montana tax. I'll wrap up here in just a second. We cut long-term capital gains tax rates effective January 1st to 4.1 and 3.0%, and it should say replacing a 2% long-term capital gains credit. Corporations have to electronically file your tax returns, essentially with no exception other than small gross receipts. Business equipment tax exemption, I'm sure we'll be hearing more about that over the next 24 hours. That was a big deal. The exemption is up now to $1 million of Montana business equipment exempt from taxation. That covers most businesses, especially small businesses in Montana. And a military retirement exemption at 50% for military retirees who are residents of Montana for the first 5-year period that they collect that retirement. So last, and then I'll turn it over for some questions, is pass-through entity tax credit, PTET credit. Montana became one of the 35 or so states that have adopted this credit. It's an annual election by businesses, essentially to pay the state income tax on behalf of their pass-through owners and deduct that state income tax on the business's federal tax return. So I know that Debbie Potter and I have been working a little bit in this area. So Debbie, would you take a minute or so, and could you comment, why do we care about this?
Yeah, it applies to the pass-throughs, like Ron says, the partnerships and S corporations are the only entities it applies to. And back in 2017, when tax reform passed, you'll all maybe remember that the SALT, your state and local tax deduction for itemized deductions, got capped at $10,000. This is you will give a larger deduction for federal purposes since they're capped at that 10,000 for itemized deduction. So it allows you to take that, basically that passing the tax burden to the entity to get the actual deduction, which is using it at income that then goes to the individual.
So it's a workaround of that itemized deduction state tax $10,000 cap. And if you haven't heard about this, you haven't talked to your tax accountant about this, you should, because if you're capped on your individual Schedule A at that 10,000 state and local tax, including property taxes, this is a workaround, and running $1 through this process, in theory, might save you 37% a tax bracket on your federal return by just doing this. But there's lots of hoops, and it was effective last year. So many of our taxpayers and many of you might have made a PTET payment on December 31st or before the end of the calendar year. So with that, I know we rushed through. I know we threw a lot of things out there. Hopefully at least some of those items were interesting to you, your entity, your business, or you individually. We have a few minutes for questions. Like I said, lob some hard ones at Joe. He traveled all the way from Des Moines last night. His United flight to Helena was canceled, so he booked Delta at the airport, and rather than coming to Helena, he flew through Minneapolis and got to Billings late last night and jumped in the car with us this morning. So we're happy to have Joe here. You would have had to listen to me the whole time. So I don't know, Scott, you have comments or questions, or?
I think we have time for one question.
One? Oh, well, maybe we could talk Scott into two questions.
Yeah. I got a mic right here. If anybody wants a question, this side of the room, perfect.
Yeah, Clay Leland, attorney for Secretary of State Christy Jacobson. Joe, you talked on the Corporate Transparency Act. Obviously, major implications, major change in federal law affecting nearly all businesses or nearly all business owners, as you mentioned. Really, my question for you, I know that there was communication in December pertaining to potential lack of public information, public education that FinCEN has provided to different stakeholders as well as different business owners. In your travels throughout the country, has FinCEN properly notified small businesses of their requirements?
I think that, whatever FinCEN's responsibility is, it hasn't worked. I think there's a huge number of businesses that are going to be affected by this that have no idea. I know that when I give talks like this, a lot of people are always surprised by it, including people who are attorneys, who you'd think would know about this, people who are setting up new LLCs all the time, who do the documentation when there's an ownership change, which is also a reportable event. And so I think that the publicity has, for whatever reason, has not gotten to where it needs to be. And I think what's going to happen for a lot of people is they're going to, get into potential large penalties, for footfalls, people who aren't money launderers, somebody who had a dormant LLC that was sitting around. Is that a shell company? No, it's an LLC I forgot I had, but it's still $500 a day.
Do you have time for one more, Scott?
Yeah, we'll give you one more.
Anyone have, maybe there's not another question. Oh, yeah, there's one.
Where's the question?
Oh, in the back.
Oh, yeah.
Was it in?
Yeah, I think there's
What am I
one.
missing?
Nope.
Stacy thought it would be really funny to watch me run from one end of the room to the other with a microphone. Anybody got a question? Apparently not, Scott.
Okay, well, Joe, Ron, thank you very much. Please